Good morning,
Good morning.
Danny.
Happy Friday.
Hi, Bill. We have Bill Schwegler from is it Team Schwegler or the Schwegler team?
Team Schwegler. Yep. Team
Team
Schwegler.
Schwegler. Yep. With United Mortgage Corp with us today, and I am so super excited. Um, we were supposed to actually meet last week, and it was my mix-up. So this is even more exciting for me because you showed up again for me. So thank you, thank you, thank you, and I'm really, really sorry.
Thank you for
But
having me. Don't be
of,
sorry.
of course. So for all of you who do not know who Bill is, he is an extremely successful team leader with United Mortgage, and I actually had the amazing opportunity to meet him during one of our deals. And I was so impressed with how smoothly our closing went. It was with Bill, and the other broker was Ken Hirsch, right? And
Hmm.
to say that I had been through a closing that had ran any smoother than that would be a shortcoming because it was just as smooth could be. So I was really intrigued, and then went back, got home, and just read up on Bill and what he's done and his journey. And since then, he's been my go-to, one of my go-to guys. I got a guy, and it happens to be Bill. And anytime I have a question or a client that is facing some type of obstacle, he's always there. He picks up, and if he doesn't pick up, he gets back to me in like nanoseconds. So I thought it might be really cool to have Bill and I just chat about mortgages, real estate, and have a short chat. And then maybe if things go well, and if he's willing and up for it, we could sit down at the YOLO Home Team site, which we are in the midst of opening, and have a longer talk about, all things mortgage and real estate. So thank you, Bill. Just
Thank you
in,
for all your kind words.
oh no, I mean every bit of it. So I think you know, Bill, but the YOLO Home Team, we started out as a non-for-profit, and we race to raise money for medically fragile and terminally ill children. We've been doing that for 12 years. And then about 3 years ago, I got my license, started buying and selling homes, obviously through clients. And every time we buy or sell a home, a portion of the proceeds go to the YOLO Strong Foundation, and we help medically fragile and terminally ill children. So we are so excited about this new opportunity to help local families. And your
Wh-
help helps
Which
them.
foundation is that? I want to jot that down. I'm sorry.
It's
Which
called
foundation was that?
it's called the YOLO, YOLO. It stands for You
Okay.
Only Live Once.
Yep.
Strong Foundation. And
Thank you.
yeah, yeah, yeah.
Wow.
So yeah, so this is what we do. And now we're opening up our own site, which is really exciting. We're 8 strong right now and building as the days progress. So we're excited for 2025 for sure.
Congratulations on your impending opening.
Oh, thank you. Thank you. So look, Bill, I guess the first question I have for you is what, I guess, hints or tips would you have for first-time home buyers, especially now, with all the changes that have happened, interest rates going up, coming down a bit,
Yeah.
just, a couple of things that you would recommend to first-time homeowners.
Well, I have two. Cool. I have two that immediately come to mind. And one has been said a million times, and any agent that's been in our space for any considerable amount of time will have heard it, and it'll be nothing new, but it will be something that's new for most first-time home buyers because they're always fresh, and so they don't know the same things that us industry professionals have heard a million times. So I'm going to say that, and then I'm going to say another one that's more with the times specifically right now. So the first one, again, that's been said a million times, but is still absolutely worth first-time homebuyers hearing always, is that you don't need to put 20% down, that you're not going to be massively penalized if you don't put 20% down, that you're not only up against other offers with 20% down, or that you cannot compete with offers that are putting 20% down. First-time homebuyer programs, the way that they really work is when the government effectively, when the government is helping reduce the cost at which the banks are borrowing the money excuse me, to then turn around and lend to the first time home buyer as a mortgage loan. The money being lent is less expensive. They put a cap on adjustments to the pricing of that money. They limit how negatively affected the borrowers will be when they're first time home buyers. If somebody's putting 25% down on a house and somebody's putting 5% down on a house, the person putting 25% down in general will get better terms. What these first time homebuyer programs are designed to do is to narrow that gap. So they put a limitation on the negative adjustments. So they reduce how expensive mortgage insurance is. They reduce negative adjustments to the interest rate for, say, having, a lower credit score that a first time homebuyer might have because they've got, student loan debts, or their credit cards haven't been in existence for 20 years yet. They've
Right.
got things that are putting them in a position and just not shine as bright as somebody buying their second, third, their next home. So they put adjustments in to greatly reduce and oftentimes completely negate the negative adjustments that first-time homebuyers would otherwise receive. So they're getting terms that are on par, or in many cases better, than people buying houses, their subsequent home, their second, third, their one of their additional homes, not their first home.
Right.
So if I hope that inspires some optimism. You don't need to put 20% down. You don't need to have $1 million saved. You can put as little as 3% down. There are legitimate down payment assistance programs if you don't even have 3% to put down. There are ways to get into homes without an absolute fortune saved.
Right.
And if they've been waiting for any considerable amount of time, they must know that it only keeps getting more expensive on them the further they kick the can down the road of buying their first house. In 13 years that I've been doing this, in another 2 months, it'll be 13 years. In the 13 years I've been doing this, never one time, over what must be more than 2,000 transactions now, never one time has a borrower wished that they waited a year to buy their home.
Yes,
Not
you
one
taught me
time.
this. I remember you said this the first time we
Never.
met, and I thought about it. I'm like, you know what? He's right. He's so right.
Never.
It stuck with
If the
me.
rates were high when they bought, they refinanced 6 months later when they came down. The homes have only gone up in value. There's absolutely no sign of that changing anywhere in the near future. It'll continue to be the case. So that's what I think is always, that's my part that's worth, I think, always worth hearing to first time home buyers, and always being a reminder, because again, we might have heard these things a million times. We might be familiar with this, but the first time home buyers that's only just been thinking about buying a home for the last month hasn't, or very likely hasn't.
Yeah.
Okay, the other one is the elevated interest rates. Interest rates are stubborn. I thought that we'd have seen rates be a bit lower by now and starting to get some relief by now, but they are persistent. They are being stubborn. But we're in a great position where my confidence in them going down continues to increase. The Fed has now lowered rates by an entire percent since September. That is, ironically, interest rates are higher, well higher than they were in September.
Yep.
But the bottom will have to fall out of this. Inflation is not in a crazy place. So they're staying stubborn and persistent, in my opinion, because of the fear of inflation having a second wind. I don't know that it's so warranted to see rates where they are right now, and so I'm confident that we will see rates come down. Whether that's going to take a year or so,
Yeah.
it might, but I can't imagine rates staying elevated for another 2 years. All of that to say, all of that to say, I myself am looking for homes right now, and I don't mind that rates are elevated, because I know when I'm talking to other people about buying a house, all rates are lower, when they come back down to around 5%, I'll look again. I want to find my house and buy my house without all of those people in my competition to bid on the house.
Yep.
So I am actively looking with the rates elevated, and ironically appreciating that they're elevated, because it's certainly helping my buyer competition. I'll get the house for less than if rates go down to 5%. I'll end up paying more for the house. If I buy the house
Interesting.
now, I'll get it for I am wagering that I'll be getting the house for less and I'll refinance it when the rates go down to 5% or better, God willing.
Yep.
So I pass that same advice on to my borrowers. I'm confident and I believe in it.
I
If I'm
think
wrong and rates are going to go into the sevens, then we'll be glad that we bought when they're in the sixes, and we'll be glad that we bought before the homes continue to appreciate another however many percent over the next 12 months.
it is a win-win.
I can't justify waiting.
Yeah, and no, I agree. Look, when we bought, well, when I bought my house, however many years ago, must have been 19 years ago, 17 years ago. Rates were, I think we were locked in for, 6.35 or something like that. Of course,
Yeah.
we refinanced, and now we're
Yep.
below
What year about
six.
did you say that was?
So, 2006,
Yeah, right. Yep. Yep. So we
and
saw
then
them what kind of steadily drop from there and then get real low like 2012.
yeah,
And that's when I got in. And then tick up a little bit for 2014, tick back down for 2016, tick back up for 2018, fall through the floor in 2020 with COVID. And then we've been seeing, and then in 2022 and staying high, they've just been so stubborn. But that's my experience in this industry is 2012, 2012 low, 2 years higher, 2 years later high, 2 years later low, two
yeah.
years later high. It's been very consistently until now, and I'm looking at the 10-year Treasury note right now for the last 5 years, and they're just being very stubborn.
But like,
But
but like you said, let's say you did buy a house, and with the ebbs and flows every 2 years, you're never going to look back and think, I wish I hadn't bought that house 2 years ago. It just doesn't
or
happen.
that I waited 2 years.
Yeah,
Right, correct.
yeah, yeah,
That they waited. Never once, never once. Because and then another thing that I say that goes right along with that is time in the market of owning real estate beats trying to time the market of real
huh,
estate. Like they say that about stocks. It's absolutely true with real estate as well. That the time that we own property and it's appreciating and giving us the benefits of its tax deductions and other things, and kind of making that forced piggy bank, that forced savings every time we make a mortgage payment and some of it goes to principal, that matters. That in many cases is where most of people's household wealth is tied up or generated and created.
yeah,
And that's why they say that the average net worth of a homeowner, I believe they say, is 40 times that of the renter, because they're in a position of forcing a savings account and forcing appreciation and tax benefits.
yeah. And rents are just insane, especially here in Long Island. It's crazy. It's crazy how high rents are.
And
Rent
I'd
is,
and I'd wager that in the light of rising interest rates and rising insurance and rising property taxes, I would wager that that trend is only going to seriously sour in the coming years. That's my
yeah,
expectation. That these things will eventually be passed on to the renter, and renting will be even more insane. I really
yeah.
believe that.
I agree. I guess off the back of that, um, I'm 52, and somewhere around my age, unfortunately, divorce seems to happen, and you see a lot of people around my age who are getting divorced or recently divorced, and I personally, and I'm in the business, I was faced with a decision where I was like, well, if I want to sell my house and if I want to buy a new house, I'm kind of like the situation seemed as if I was like a first time homeowner just because of my situation with my ex.
Yep.
So my next question for you would be what recommendations would you give for, a girl like me, 52, great credit, but really, kind of like, of course, working. But what types of tips would you give if I wanted to go out and buy my own home for the first time?
Yeah. It's 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 going to be It's going to be that very similar advice for a first-time home buyer. It's that although there are extra financial challenges, a new month-to-month financial situation, I guess that's the complexity, right? It's not new. Home ownership isn't new to somebody that was recently divorced and looking to become a homeowner again. Home ownership isn't new. However, their whole financial situation has changed in one way or another.
Yeah.
It's absolute. So that's very fresh. So that adds the complexity, is a completely different financial map, probably new expenses or new um uh, a different budgeting strategy, a different things, even if temporarily, a different scenario. And so that has to be quickly, accurately calculated,
Yeah.
looking at our new true expenses, looking at our new true income, and creating a roadmap of what's a responsible budget, and then getting on the horse of home ownership, taking a good hard look at the financial situation in the moment
Yeah.
and getting into home ownership. Now, again, similar to a first time home buyer, is going to be that maybe the house that we're looking at that time after a recent divorce isn't the forever home, but getting into a home ownership position, even if it was a condo or a co-op or something that's similar to a first time home buyer, ends up being the engine that drives the wealth that in a few years, and after some adjustment and things like that and changes in life, then becomes an opportunity to help you get into the forever home.
Right.
So it's going to be that vehicle that helps drive the equity for you to then have 20% to put down on a home, maybe 3, 5, 6 years, whatever it's going to be, just depending on the
Right.
plan that you put into place. But home ownership during that time, instead of renting for 5 years, is absolutely no different than that first time home buyer that gets that early head start in life by being a first time home buyer early in life. It's just true.
All right. Look, you and I are definitely gonna have to have a little chit chat after
Oh,
this. All
I
right.
you
I
got
need your
I
help,
would love
Bill.
to I'd love to actually put a real outfit on and come, be in the office in front of a real camera, not holding myself up here. So please, I'll be ready for that whenever you are.
All
And
right.
again, thank you. I love working with you. Anybody that's working with you is very fortunate and should
Oh,
consider themselves so. And I
thank
look
you.
forward to that
I
to that real interview.
I actually have give me 1 second. My dogs are banging on the door. Hold on 1 second. Okay. So for all the other realtors that are watching, um what do you guys do to ensure a smooth sale? Because I got to tell you, I was blown away by how I guess how smooth the closing went. So what do you guys do on your team to ensure that people, or closings happen so smoothly, so quickly? What do you do?
Danielle, this conversation is so valuable because rather than preaching from one side like I find myself doing, we get to have this dynamic where and I'm so appreciative for it, but you were on the other side. So what I'm about to say here that I always preach works for a buyer agent, you're going to be a first-hand account of being on the other side of the transaction and it coming true. And that's that when Kenny is making the offer, when you are my buyer agent, Danielle, and you are making an offer and you CC me on that offer where realtors, buyer agents often don't include their lender, don't need to.
Yep.
I beg my agents, please CC me on that email. And it's because when you send that offer and you've CC'd your lender and the lender chimes right in afterwards to say, hey, just introducing myself, my name is Bill Schwegler, and we have not only thoroughly and accurately pre-approved this file, but we have also sent it to underwriting and received a formal approval and commitment already, and I'm available 24/7 for anything that you need. And I answer every phone call. Or while you're calling me, I text you to say, hey, I'm jumping off this Zoom call with another agent and I'll call you right back. And then
Yeah.
I do. That immediately builds trust and familiarity, right?
Yep.
So you were on the other side of that. So you got to talk to your seller and say, this agent came in with a strong offer. His lender was available when I called to vet the deal, and they seem very cohesive and responsive. And I feel like we're not going to be in the dark through this process, and that held true through the process.
Yep.
So that we're trying to build that instant trust. And when it's a great agent like you or other agents that I work with, and a good strong lender, and it's a cohesive team that's done this, that has a system in place, it resonates on the seller side and builds that trust and helps our buyer get to the closing table. And and then here we are on
Yep.
the Zoom call together. While I mentioned Teddy just because he was on that transaction on the other side of it, but it's cool that it helped reassure you and your seller, and then as expected came through for an on time closing without issue, like it should
Yeah.
be.
Yeah. All right. Let's kind of just talk about, I guess, what are some of the potential risks and rewards of investing in real estate? All right.
Ooh,
How can a mortgage broker help access these factors?
I love this question. I love this question. It's again an incredible tool. It's okay. I'm going to give you the pros and the cons, though.
Yeah.
Uh, right? What else would it be worth? It's an incredible vehicle to wealth. It's real estate investing, even better than home ownership where we live. Home ownership for our primary residences, I am obviously passionate about. Real estate investing, investment properties, and things like that. Absolutely incredible way to build and generate wealth. However, it's a little tricky, especially now. And the reason that I found it tricky, I recently had two investment properties in Florida, and property taxes and homeowners insurances during these last 3 years, along with interest rates, of course, have absolutely skyrocketed. I mean, more than doubled, both of them. And so if we're looking at if how home ownership is already expensive, and what happens is when rates rise and insurance rise and property taxes rise, that affects the mortgage payment immediately if your interest rate isn't locked in or you haven't purchased the place yet, right? That immediately impacts the monthly payment. However, rents kind of lag behind, right? If their renter is locked in for a lease for 12 months, 24 months, they can't just say, oh, well, hey, I just got my insurance bill and it is double, so I'm going to have to raise your rent, right? No,
Yeah.
that gets negotiated and it can only really realistically increase by so much based on the lease or based on what else is happening in the market. So what I'm trying to say is that the rent kind of lags behind. It can't just jump up as fast as mortgage payments can,
Right. Yeah.
right? So what I'm trying to say is I had two properties. These things skyrocketed. So when it was already expensive to buy a home as an investment property in Florida, in New York, and anywhere, it got way more expensive. And the profit month to month, the cash flow month to month was just withering away. And if it's not a significant number, then what I had to start to worry about was, am I going to have, God forbid this renter, has an emergency in their life and they can't pay rent for any amount of time. I'm going to have a $4,000 or $5,000 a month expense over my head
Right.
until that gets resolved.
Yeah.
And if there's not enough cash flow happening for the rest of the year when they're paying on time, then it just doesn't make any sense. So I counted my blessings. I saw great appreciation, even in only owning them for a year or two each, respectively. And I sold them for a profit on appreciation. And I'm grateful for that. But this is all mention worthy because we have to be very careful to leave ourselves enough room for these crazy rising insurance policies, even here in New York. We have to leave ourselves room so that you have a cushion there. God forbid things keep rising. God forbid there is a lapse in rental income payments or there's a vacancy for any amount of time for any reason. We have to leave ourselves some room to breathe there. That's so I'm saying to exercise some caution, but on the other side, I'm saying if you get the opportunity to get into a place that can cash flow and appreciate confidently over time, it is an incredible vehicle to wealth. It's not passive, though, Danielle. It's
Yeah.
going to be my last note. It's not passive. If I invest into the stock market, that is passive. That is truly passive. Being a landlord is not passive. If you want to, and probably what I would do next time is have a property manager to take care of things and make it more so passive, but it's not passive. The
Right.
phone rings, something's wrong, rent's late. There is absolutely responsibilities and involvement. And if you're prepared for that and you know what you're getting into, it is a wonderful vehicle.
This is why I like really respect. Harry Lizzie.
What are their
Sorry.
names? It's okay. What are their names?
So that's Prince Harry Potter Kane Taylor, and that's Queen Elizabeth Taylor. And right
Thank you.
now they're going at it. So this is why, I just think that um, going to someone like you who really thinks through all of the options, the pros and cons. I mean, yeah, you're a mortgage broker. You've been a go-to person for me and my clients, but you really do think through all the pros and cons in each of these scenarios. Like I was saying before, recently, divorced. I have a home, blessed to have a home and financially secure, but have been going back and forth about, the next step. And the next step for me, is having some type of investment. And, to go to someone like you and for them to say, look, have you thought about this is just invaluable, like so valuable. Because, there are a lot of things that people don't think about when they embark on these types of ventures. And, there is some type of stability that you have, and you're kind of there's a risk, but
Yeah.
knowing that they have someone like you that they can defer to or make them
Yeah.
think or explore is just amazing.
There, absolutely. There is a risk. There's a risk to not go invest in real estate as well, though, right? So there's
Yeah,
a
of
risk in
course.
everything. There's a risk
Yeah,
in doing nothing.
yeah,
So it's just about just accurately weighing these things. And what I found, I guess this could be geared more towards our real estate associates, is I found massive perks being in real estate, meaning that like my knowledge in doing this for 13 years is beyond just mortgages themselves, right? We're looking at credit profile and financial profiles every day, and we get to see what's working and what's not working. And
yeah,
very similarly on your side, you're seeing at where are things appreciating, where are things not appreciating, where's there opportunities for cash flow,
yeah,
what's appreciation going to look like over the next 2 years. You know better than 99.9%, right? So there's nice perks that come with
of
being in
course,
real estate beyond just specifically what we do.
yeah.
And that gives us an advantage as real estate investors.
So look, I would love to have an in-person chat with you, and dive into some of these topics more clearly, um, a little bit more in depth. Um, I kind of thought it would be really nice if maybe some people got to know you as a person. So I'm going to ask you one personal question. Okay, one
Sure.
personal question,
Hit
so
me.
people can get some insight on Bill, and what's kind of like um, a look on your journey right now and how you've gotten to where you were to where you are now. So, what do you have today that your 16-year-old self would have died for?
Oh,
Completely
I mean,
personal.
yeah.
Tell me, what is it that you have today in your life that your 16-year-old boy would have
Yeah.
died for? Tell me.
Yeah, the dad in me wants to say, my amazing and beautiful children, of course, but
Yeah,
that's the 34-year-old dad talking to you. The 16-year-old me would love, the cars and the access to driving. I've always been into cars. So that
yeah.
my 16-year-old self would love to walk into my own garage right now for sure. That's the true answer.
And what do you have right now that your 100-year-old self would miss?
Oh man, I mean, of course, the children, and I just recently got a tattoo for my dog that passed. It's kind of got, little meaning between her and I that we know. And so, even the 34-year-old version of me misses my dog from the last 10 years, but it'll just be absorbing these times with whether it's a pet or kids or family. It'll just be absorbing this time and making sure that he didn't
Time,
pass away while we're
time
busy,
is
busy with
crazy.
real estate. Yeah,
Yeah,
exactly.
time, time, time. Time is so important to us in so
Yeah.
many levels, isn't it, Bill? Well, look,
It,
thank you, thank you, thank you. I hope that everyone who's watching has found this really helpful, and will watch us the next time when we're in person at our new site. And look, I honestly, I can't thank you enough. You are salt of the earth. You are so generous with your time, and I really look forward to working with you. We're gonna get some deals, right? And we're gonna help some people together.
We absolutely are. I'm really looking forward to the in-person meeting. I think that's going to be really exciting. We'll, get dressed and get even further. This has been fantastic, but to even get really immersed into it is going to be awesome. So I can't wait. And just tell me what I can be doing to help with your opening.
Thank you, thank you, thank you, thank you.
Thank
Again,
you.
just to reiterate, every time the YOLO Home Team buys or sells a home or helps a client buy or sell a home, a portion of all of our sales proceeds help local families with medically fragile and terminally ill children. So anytime we work together, we're helping a local family in need. Okay, so thank you, Bill. We really appreciate
I
you.
loved I love that cause. I
All
love
right,
that. That's amazing. I'm
thank
going to pay
you.
more attention to that. Thank you, Danielle.
All right, take care. Have a great weekend.
Bye. You too.
Bye.
Happy Friday.
Yeah,
Bye.
happy Friday.